Hey everybody, what's going on? I've got another nice little breakout set up for us in another one of the investor community portfolio stocks. This one is Zuora, and you should be able to see a weekly chart on your screen. But first, a couple little disclaimers. Obviously, this is not to be intended as investment advice. You trade at your own risk. Also want to let you know that I have a position in Zuora. It's in my investment account. It's a long-term position, and I am full size in that one. So I'm not going to be adding on a breakout here, but I think that investors could. Now, I think that this is probably fairly valued in around here, but I also think that there's room for price to increase with sentiment, especially as we come into earnings. Now, earnings are unconfirmed just yet, but you can see that eSignal is telling us earnings on December 6th. I've seen on Earnings Whisper, they're saying November 24th. So we've still got lots of time for a swing trade, and we've got time here to take advantage of any run-up into earnings. We've been seeing a lot of those this earnings season. And we'll also, if we decided to play with this with options, and I'll show you an options play, we will benefit from an increase in implied volatility, which is starting already, and that's unusual considering this has been going sideways for a week. So I've got a few ways to play this. This looks like a really interesting play if this breaks out. And one last word of warning, we've got the Fed coming up in a couple of hours. The market's already starting to go sideways a little bit. So I'm kind of hoping that this does not break out before the Fed. I'd prefer this breaks out tomorrow. If we can consolidate some more today, that'd be great. That'd be a better setup for tomorrow. Because I really don't want to have to enter this before the Fed announcement, because that's quite a binary event. Anything could happen. Okay, so you can see that since the IPO, Zuora, popped up a little bit, came down until COVID, and has been trending up. We started to develop this rising wedge type consolidation and recently broke out of that. Let's look at the daily chart. And you can see that rising wedge here, and you can see the breakout after a strong run up. And this has created a nice looking bull flag, as you can see. Now I've marked out a couple levels here. These would be stops for a couple of different kinds of traders. And if we come down to here, we can see the measured move on this bull flag, right? We just measure the height of the flagpole. We add that to the breakout point, and we get a measure move up to around 29.70. So just under 30 bucks. So how could we play this? Let's zoom in a little bit more on the 65-minute chart. We'll get a clearer look. All right, so you can see I'm looking at this intraday level back here from October 26th. That intraday high, where we saw this pullback that really started this consolidation, that was 22.17. So I'm thinking an entry, just above that, 22.18 or so, 22.20, something like that. Makes for a good entry. It gets us just above all these little wicks right here, that pulled back. So hopefully that reduces our chance of a false breakout. As far as stops go, an aggressive trader could put a stop below today's low. That still gives a fair bit of room for it to move back if there's a bit of a fake breakout, and then maybe try again. But it is pretty tight, so there's extra risk on a stop that's tight. But it does give a really nice risk-reward ratio of 14-1 on this trade. Now, a more conservative stop would be under this pair of lows right here. So those are around 21.10. Given that's so close to the whole number of 21, I'd want to be under 21. So I'd probably go in around 21 or 20.94, that area right there. Would be a more conservative stop, and still gives you a decent risk reward of 6-1. Another way to play this, like I mentioned, would be with options. So if we look at the calls here for December, because that takes us out past earnings, and we can benefit quite strongly from either from the breakout and a run up into earnings, and the likely increased implied volatility, which is going to make those calls much more valuable. And you see, I've highlighted the 24 strike. We've got a little bit of open interest here. Now, another thing is these, there's not a lot of volume in these options, unfortunately. So you've got to be careful on your entry. But I think there's enough open interest at the 24 that we can get in and out of this okay. You can see the midpoint on these is 90 cents, and we've got a 35 delta. Now, normally on a play like this, I'd want to be around the 40 delta. We'll just have to settle for the 35. I'm not thrilled about the 44 delta here, the 23 strike. There isn't very much open interest on this one at all. And really none of the others, not until we get down to, the 20. So let's settle on the 24 delta. Right now that's in around 90 cents. Because of the wide spread, don't be dropping a market order on this. Make sure you go with a limit order and try and get that midpoint. Maybe plus or minus 5 cents. So that's the setup. Remember, trade at your own risk, and happy trading and good luck. Thanks, everyone.